Hi guys. So the last piece of chapter 11, when we're talking about making decisions at the margin, is making decisions where we have a constrained resource. There's some bottleneck in our system. Maybe every product that we make has to go through one particular machine. So in order to prioritize, well, which product should we make first? We're going to look at this part of the decision-making criteria. What is the highest contribution margin per minute or per use of that constrained resource? And I think the easiest way to look at this is to go through an example. So here we have two products that we make, product 1 and product 2. And we can see that when we make product 1, we make $24 of contribution margin per unit. So that sounds pretty good. And usually if we didn't have constrained resources, like we'd make all the product 1s, and then we'd work on the product 2s. But we do have a constrained resource in this case. The constrained resource is machine A1. We only have a certain number of minutes available on machine A1. So in this case, we're going to look at the contribution margin per minute of that constrained resource. Now, obviously, here, if you look here, you can make one product 1. I should name these something different. One product 1 in 1 minute. You could make 2 of these product 2s in 1 minute. It only takes half a minute to make a product 2. So for every minute of this machine, you can make 2 of these, or $30 of contribution margin, or you can make 1 of those at $24 contribution margin. So obviously, if this is the constrained resource, we're going to make all of product 2s first. And as we'll look at this, it's the constrained resource. It has a capacity of 2,400 minutes per week. Should we focus on product 1 or product 2? And this is what we just said, that how many units can we make in any, for a minute of A1, we can make 1 unit of product 1. We could make 2 units of product 2, right? So what generates the most profit for the company is prioritizing making product 2 first. Now, if we have extra minutes, of course, we're going to keep going. We'll make more product 1. But for each minute of machine A1, we'll make 2 product 2s. So the contribution margin for 1 minute of this A1 machine, too many numbers, is $30 for a minute. For product 1, it's $24 for a minute. So here's what we're going to do. We're going to make this, the product 2s. And then once we're finished making all the product 2s, then whatever we have left, we'll use and make the remainder of product 1. So here's the weekly demand. Takes half a minute. We're going to use 1,100 minutes. So we have 1,300 minutes available left to make product 1. All right. This gives us a total contribution margin for this company of $64,200. And if you're just feeling suspicious, you can go back and try to rework this problem to end up with a higher contribution margin, and you can't get it if you only have a certain number of minutes on product machine A1. We're going to look at one additional example here. That's it. I just want to make sure y'all get this. So here's a reproduction colonial furniture. We're going to make hardwoods, and we can make chairs and we can make tables. And the selling price of the chairs is $80 and the variable cost is $30. So the contribution margin for making a chair, 80 minus 30, the contribution margin for making a chair is $50. The contribution margin for making a table is 400 minus 200. Contribution margin for making a table is $200. A chair takes 2 board feet. A table takes 10 board feet. And then we have a monthly demand of 600 chairs and 100 tables, right? You're going to put six chairs around a table. The supplier of hardwood is only able to supply 2,000 board feet this month. So is that enough to make all the chairs and all the tables? Well, I can look at this and say, well, it's 10 board feet per table. There's 100, that's 1,000. There's 1,200 here. 1,200 board feet are required. I add those together, 1,000 plus 1,200, that's 2,200 board feet. Do we have enough to supply the to supply 2,200? No, we don't. So here's the 2 times the 600 plus the 10 times the 100. We need 2,200. We only have 2,000. So board feet is a constrained resource. So what we're going to do is we're going to figure out the contribution margin per board foot. Contribution margin per board foot. So what will we do to maximize the profit? Here we get, in the chairs, we have $50 of contribution margin. It requires 2 board feet. So the contribution margin per board foot is 50 divided by 2, $25 per board foot. Here are the tables. We have $200 of contribution margin divided by 10, $20 per board foot. $25 per board foot, $20 per board foot. We're going to make all of the chairs. We're going to make all of the chairs. And what we have left in board feet, we're going to make tables. That's why B is the correct answer. Here we go. Contribution margin per board foot. We're going to make all of the chairs. That requires 1,200 board feet. We only have 2,000 available. There's 800 board feet remaining. It takes 10 to make a table. So we have 80 tables. That's it. One of the things that one of the other questions that management's going to ask is, well, how much are we willing to pay in addition to buy more board feet? Maybe I'll go to another supplier where it's more expensive. I still have the ability to make tables here, and the contribution margin per board foot to make a table is $20. So I'm going to be willing to pay up to $20 for additional board feet, up to $20 additional for additional board foot. Now, I don't want to pay $20. I'd rather pay $5 or $10. But the most I would be willing to pay is $20 per board foot. And that's the end of this lecture. And that's why I wanted to go ahead and give you guys this little constrained resource piece. Again, homework will be due on Sunday, but there's no late penalty. So if we want to go through this in greater detail on Monday, we can. We'll be doing some more practice on Monday, and I will see you then.